Happy Sunday, but not to banks. Guys, I want to let you know the video starts off pretty slow, but we have a lot of important information that I would like you to pay attention to. But if you don't want to, you can skip through the boring part of the video, which starts at the beginning, but it is important information. So if you want to just play the audio and do something else, make sure to listen and take it in. We are coming up on major systematic risk this week that could have a substantial impact on the overall market and could be the quote-unquote black swan that everyone has been waiting for. Now, this will affect AMC, this will affect GameStop, and we have a lot of stuff to cover. If I have time before uploading, because I do have to go out to lunch, it's my sister's birthday today, make sure to wish her a happy birthday in the comments down below, and she actually has a YouTube, so go subscribe to that. But if I have time, I will leave timestamps under the video, but it will all correlate. So make sure to watch until the end, hit the like button if you find value out of the video. Let's get into it. You guys remember when we just talked about this? Margin calls from clearinghouses risks stoking crises. Clearinghouses may issue margin calls, but it's not as simple as we've been thinking. Take a look at screenshot number 1 that I'm going to show you guys. Here is screenshot number 2, screenshot number 3, showing treasuries purchased by the Fed overnight. Number 4, number 5, stuff happening with China, which we're going to talk about a little bit later and how it correlates. And finally, the last screenshot, markets aren't pricing in systematic shock just yet. Now, if commercial banks strictly adhere to central bank's directives, they absorb those losses into their balance sheets. The central bank won't shoulder that burden for them. We covered most of this, right? The Bank Term Funding Program, Fed liquidity bailouts for banks reaching new all-time highs, Fed losses exceeding $125 billion, reverse repo collapsing sub $800 billion, repo facility jumping to the highest level since the COVID-19 shutdown, and then European central banks, Chinese real estate, etc., etc. We covered all the way until the end of this in the previous video, where a decrease in reverse repos is bearish and an increase in repo is also bearish, and they both have been occurring exactly as predicted. Shout out to Boss Blunts for this due diligence, by the way. Lack of liquidity leads to margin calls, fire sales of blue chip stocks and bonds, and skyrocketing of heavily shorted equities and assets such as precious metals, meme stocks, inverse ETFs, and indexes. Now, we're not going to cover this entire thing, but basically, they're all betting on a federally funded bailout with your money in the face of the possibility of the worst recession and stagflation this country has ever seen, due to the Ponzi scheme that is exacerbated by the record level of COVID-19 money printing bailouts given to institutions in 2020 in response to the collapse of the RRP on September 19th, 2019. When the Fed had taken over the repo operations to prevent a full-blown stock market collapse at the time. VW, gold, silver, VIX, etc. in 2008 and onwards, just 13 days after the worst days in the S&P 500 history, saw a 13% loss in a single day. Now, if we see this black swan hit or even see something similar, which the numbers are much worse than previously during the 2008 financial crisis, and we're going to cover that, we would see the SPY drop 13%, hit $400 even, which is the bottom of a zone that we actually have drawn out, the bottom demand zone where we assume the SPY would have that last bounce between 400 and 409, right? That would bring the SPY all the way down to 400 even. Let me know in the comments down below if you think there is going to be a black swan and if we will reach that low on the SPY, but we are not done yet. First of all, bank credit has officially entered contraction territory. You can see this sharp drop right here, crossing this line. After witnessing one of the sharpest drops on record since 1974, a contraction has only happened one time, during the 2008 financial crisis. This is why this is so important, and there are many other things that are going to correlate to the market crashing. But on top of that, speaking of banks, Wells Fargo now warns of massive layoffs for 2024 as well. Now, keep in mind, we do have that $1 quadrillion in swaps expiring on the 15th that everybody is talking about, and if this correlates, you may see the SPY have something happen that never has historically happened this week, because we do have catalysts for the overall market. Before we get into those catalysts, for decades, job openings in the US and the S&P 500 have highly correlated. Beginning in early 2022, job openings began moving sharply lower. Currently, the S&P 500 and job openings have a wider gap than ever before, and you can see that in the chart right here. Job openings and S&P 500 diverting when they usually move in tandem, and every single gap gets filled. Either job openings need to rise or the S&P 500 needs to fall, but history says the gap must be closed. While there was a downtick yesterday in the unemployment rate powered by healthcare and government job increases, labor market appears to be weakening. More weakening would lead to UR rising, recession, and the gap closing with the S&P 500 falling. So basically, this gap has to get closed, and if the labor market remains weaker, remains falling, right, the S&P 500 is going to have to meet it at the bottom, which this is the more likely scenario as of right now. And if that gap spreads further, it's just going to be a worse black swan in the near future. On top of that, according to Paulo, the debt to GDP ratio in the US is on track to hit 200% within the next 15 years. Less than 20 years ago, the debt to GDP ratio was just 50%. The current debt to GDP ratio is the US is at 120%, nearly 2.5x what it was prior to 2008. And to put this into perspective, even World War II debt to GDP ratio peaked at 106%, which is below current levels. 2024 will be the first year with over $1 trillion in interest expense. What is the long-term plan? Numbers worse than 2008. Key events this week. This is going to prep you for everything that is about to happen. So keep your eye on these catalysts. First of all, Tuesday, November CPI inflation data comes out. Wednesday, you have OPEC monthly report, November PPI inflation, as well as the Fed rate decision and statement. Wednesday, December 13th, is going to shift the market hard. Thursday, you have retail sales data, initial jobless claims, so get ready for the market this week. Now, a little sprinkle on top. What's happening in China will correlate over to here. Shanghai Composite fell nearly 2% after Moody's cut its outlook on China's credit rating. Since June 2023, China has saw Evergrande file Chapter 15 bankruptcy, largest tax cut since 2008, interest rates lowered on $6 trillion worth of mortgages, unexpectedly cuts rates by most since 2020, bank runs, banks cutting deposits for the third time in the year, government plans another new stimulus package, and overall, 2024 is going to be a very, very volatile year. Now, AMC, GameStop, and you need to stay for what I have for GameStop. But before we get into those, guys, I dropped a video yesterday, and this is important for you. Best stocks to buy now for 2024. I cover the stocks I will be entering in two major sectors. As soon as next week, I will be entering some positions. So go watch that video. And if you don't want to watch the video, then hopefully you're in Discord where I post the positions that I take. The Discord is the second link under the description as well as pinned in the top of comments. We talk stocks on the daily. We post gains, post losses, and have options trading alerts in there. I also post my trades in there as soon as I take them. So get in the Discord. It's a coffee a month. Cheapest Discord on YouTube. Best Discord on YouTube. Come hang out with me and the most amazing people. Also, if you want up to 15 free stocks, yes, 15, each valued up to $2,000 per stock, just sign up using my link for Moomoo and make a deposit of any amount before the week starts. I mean, you can do it when the week does start, but you might as well do it as soon as possible. On top of that, if you do invest in Moomoo and you don't end up using your money to trade, you are earning 5.1% APY on your uninvested cash. Overall, great platform to use, giving you access to free level 2 order book data, trading options, going long, going short, these free stocks, 5.1% APY, and plenty more. Those links are in the top of the description and pinned in the top of comments. AMC, correlating to the S&P 500. We just want short sellers to be wrong. Okay, that is what has to happen. It's not there is going to be a black swan, so AMC is going to squeeze, or the SPY is going to rally, so AMC is going to squeeze. Short sellers just have to be wrong. You can see right here, AMC, the S&P 500, ended up tracking away from each other for some time, both reaching lows, right? And this is where short sellers were completely wrong. Nobody would have thought that the COVID crash would have rebounded that quickly, right? SPY continued to climb after AMC hit its low, and short sellers were wrong, right? Short sellers were still going short, and not to mention retail bought in AMC down here, bringing it extremely low. Retail ended up counteracting the short positions with all of the gains made from SPY, made from crypto, made from everything across the board, right? And short sellers were essentially wrong. Now, shorts have continued to pack on shorts with over $45 billion in unrealized losses, and since the SPY has continued to go green, that is probably over 50-60 billion as of now as we speak, right? So that is essentially what we need to happen. GameStop, looking at it with no drawings, this is clear as day. You can see the manipulation, the cycles that are right in front of us, right? This major pop, second peak, okay? Major pop, second peak. Both times you have flush down and then a double flush. Flush down, double flush. Seeing the peak again, peak, double peak. Flush down, double flush. Peak, right? Just like this peak or this peak or this peak. Expect a double peak and another flush down, right? If this point of interest isn't going to catapult us, which I want to talk about. Brian Cohen keeps tweeting overpaid executives, and all of these posts were sent on OPEC's settlement dates. See, screenshot 1, screenshot 2 and 3, screenshot 4, and screenshot 5. Now, December 15th, this month, the 1 quadrillion swaps expiring, that some people say is a glitch. Some people say is a catalyst that we've never seen before. December 15th is the OPEX of this month. Moving on, Wall Street analysts have just increased GameStop Q4 EPS expectations to $84 million profit. Now, if that does come to fruition, which they may or may not be jumping the gun here, that would mean GameStop is profitable for the year, okay? If GameStop is actually in the point of interest and there's going to be a black swan and they are expecting it, these catalysts may line up, okay? GameStop may not be being put through another cycle. And one thing I wanted to note is each time these cycles played out, they came up where that major resistance would be and went a little bit over, right? Little bit over the $40 resistance right here. Same thing right here. The resistance would have been around $23.50, $24, went a little bit over, both times wicking over, okay? Same goes for here. Resistance is going to be around $16.50, already went slightly over. If we go heavily over, breaking $28, you could say these are probably done. Now, before we start the week, GameStop 400,000 shares available to borrow. Last week, 13,000 calls expired in the money compared to 3,000 puts, so we won on the option chain. Looking good. However, a lot of premium going to market makers. Gamma to the upside as of right now for GameStop. Short exempts decreased 78,000 over on GameStop. AMC 6.1 million shares available to borrow as we start the week. We lost on the options chain 5,000 calls compared to 13,000 puts, and a lot of premium dumped to market makers. A lot of people are betting bullish on next week for AMC, so hopefully we get that climb so we can see some Gamma. Short exempts actually increased to 181,000. Finally, to close out the video, Round Hill meme stock ETF meme will officially be shutting down and liquidating this week. Drop your theories in the comments down below, but let's say trillions of dollars in swaps were due for payment this week. And a lot of those swaps are from UBS that inherited them from Credit Suisse, which have lots of meme baskets in them. What would happen to the price of that meme ETF? And speaking of UBS, someone's having problems in Discord as well. That is what I got for you guys for this Sunday video. Hopefully you enjoyed watching or found value out of the video. Again, get in Discord. Get your free stocks. Follow me on TikTok, Twitter, as well as Instagram. I love you all. Lottery Stocks out.